We're excited to announce the launch of the Tax Analysts Awards of Distinction, recognizing individuals and organizations whose work has had a significant and lasting impact on tax law, policy, administration, or public understanding. The program launches this year with the U.S. state and local taxation category. We are currently accepting submissions to honor contributions that have profoundly influenced state, local, or multi-state taxation. The future of tax policy starts with bold ideas and bold leaders. Nominate now through June 30th. For more information, visit awards.taxanalysts.org. Again, that's awards.taxanalysts.org.
Welcome to Tax Notes Talk, a podcast from Tax Notes, the leading source of tax news, information, and analysis.
Welcome to the podcast. I'm David Stewart, Editor-in-Chief of Tax Notes Today International. This week, Commissioners of IRS Past. Since President Trump took office in January, the IRS has been in the spotlight. We've previously covered how the agency is handling staff reductions and data sharing orders, which you can find linked to in the show notes. Today we're featuring a special discussion with a few previous leaders of the agency. Tax Analyst President and CEO Kara Griffith recently sat down with 4 former IRS commissioners, Daniel Werfel, Chuck Rettig, John Koskinen, and Larry Gibbs, to get their insights on the future of the IRS and tax administration during this time of tremendous change and uncertainty. Their discussion, part of our Taxing Issues webinar series, spanned 2 hours and covered many of the big questions plaguing the IRS. We've curated a selection of the former commissioners' responses for this episode, but if you'd like to hear the whole discussion, you can find the link in the show notes. For now, I'll hand it over to Kara as we go to that interview.
Danny, let's talk about all of the probationary workers that you were able to hire that were among the first that got laid off. Was that the right set of employees to focus on? And what now? How does the IRS replace the talent, and can they?
Definitely wasn't the right set because it was the expeditious set, because the reality is that in your first year of employment, it's easier to separate you from the federal government. You don't have to go through the RIF process, which takes longer. And, we should mention that I don't know that it's been confirmed, but there is some evidence that the IRS is moving towards additional layoffs through RIFs and working through that process. If you're going to downsize, it should be done strategically. When I was still there prior to January 20th, and we had an opportunity to brief the transition team at the time, and it was clear that they had an ambition to shrink the size of government as it pertains to the number of people. So we went into those briefings thinking, how can we provide these new leaders with a roadmap for how to meet that objective? And what we suggested was a strategic approach where you create a moonshot, if you will, of a staff reduction that could be, kind of significant, so that you're kind of matching what you promised during the campaign, what you're promising publicly. But the roadmap to get there involves deploying the technology that would be appropriate to replace the individuals, proving that technology could be tested, deployed, and meet the mission needs, whether it's the taxpayer need on customer service, or whether it is audit fidelity on the audit side, or data security, whatever the need is. And so it's a step function. You automate or modernize successfully, you downsize. Next stage, next mile marker. You automate the next mile marker successfully, and then you downsize. And if you do that right, it would be a mix of new, mid, and later career employees. You'd also give these employees a heads up that your functionality is moving towards an automated solution. So you allow them to plan, versus for a lot, I think for just about every probationary employee, an email at 10 a.m. and being told they need to vacate the premises at 11 a.m. And what concerns me about that not only is not how I would run the railroad, so to speak, in terms of how I would move forward, but also, how do you convince a generation of talent to come to government, to come to the IRS? Because whether you are a staunch believer in small government or big government, but let's say you're a staunch believer in small government, you want the government to work. and you want it to work effectively. You don't want to be frustrated by mistakes, by delays, and by incompetence. So if you're going to shrink the government by 50%, make sure the 50% that are there are talented, trained, have the tools, etc. How do you bring in the talent when the message you've sent to public servants is that this is more of an unstable job platform, that it could be that you'll get an email and have to vacate within an hour? And I think there'll be some post-trauma to these layoffs, not just at the IRS, but broader, that it'll be harder for someone like me, who's a fierce advocate for public service and public servants, to go into a high school auditorium or a community college or a college and say, consider public service as your career. It's a harder mountain to climb now, to convince people to come to government. Again, not to bloat government, not to kind of fill the ranks with unnecessary employees. It's like, you tell me what size government you want, you still need talented people.
So, Larry, I do want to turn to you next, and let's talk about the sort of the nitty-gritty of an IRS and the personnel that you need, the type of personnel that you need. What does it look like? How many personnel, and sort of even by percentages, if you want to try to get that specific, does the IRS really need to continue to encourage compliance? Our goal is voluntary compliance. What does an IRS need to look like?
Taxpayer compliance really falls into, I would say, three categories from the standpoint of the IRS. Taxpayer audits to encourage compliance, taxpayer investigations to investigate those who have not tried to comply, and taxpayer collections to collect whatever money is owed by taxpayers that hasn't been paid at the time they filed the tax returns. The important thing I found in my first stint at the IRS, which was in 1972 to 76, I came back 10 years later to become commissioner. But during the first stint, I learned that, generally speaking, the IRS was attempting to encourage voluntary compliance, realizing when the Income Tax Act was passed, it was not self-executing and would depend to a large extent on voluntary compliance by taxpayers. That's true today. It's been true throughout the period of time that we've had an income tax. People say, Larry, voluntary compliance. I don't voluntarily comply. I'm forced to comply. That's really not quite accurate. What the IRS has done with its staffing is to ensure that if money is owed, it would be collected. Also with the criminal investigators that are at the IRS. They're renowned. They're the only agency within the federal government that can follow the money. FBI can't do it. Other agencies have tried, but the IRS is the agency that can do it. Really, it comes down to audits. And what I was told was that the important thing in the audit area is for taxpayers to credibly believe that they could be audited. That's for recognition. There's not enough, there will never be, and should not be, enough employees for a one-on-one situation. Although my father was absolutely convinced that someone at the IRS every year looked at his return. That's really the key. And in terms of trying to indicate numbers, it's really an approach. So that in all of your audit categories, in the individual audits, you have low income up to high income. And the strata into which individuals are divided for purposes of allocating audit personnel are different. Your low income area is a very large segment of taxpayers, much larger than, for example, your high income segment. A lot of people think in terms of, well, why don't we go where the money is? Isn't that the way to allocate your audit personnel? And what I learned was, no, it's not. You want to allocate your personnel so that in your larger groups, there is enough in the way of audits that people credibly believe, hey, low income or not, I could be audited. And as you move up the scale, same thing. And realize that we're not talking just about individuals. We're talking about business taxpayers. We're talking about small, medium, large corporations, partnerships, trusts and estates. And then you get over into the exempt area where you have tax exempt organizations, charities, social clubs, things of that nature. So the IRS has to allocate its audit personnel in such a way that in each of these categories across the board, there's a credible prospect that those that are in the group could be audited. Not easy. And particularly as the audit personnel has waxed and waned. And with the, I think it was the 2023-22 Act that provided $80 billion to the IRS over 10 years, over a 10-year period. Much of that was, not all of it, but much of it was allocated to restoring the audit levels. Because at the time that act was passed, the audit levels of the Internal Revenue Service were the same as they were in World War II. Hard to believe, but that's the level to which they had sunk. Nevertheless, as the levels go up and down, the idea is allocation of audit personnel to provide that credible threat. Has it been effective? We know from the tax gap studies that the IRS has done, showing the difference between taxes owed and taxes paid. A portion of that indicates that the compliance level, non-compliance level has gone up over the years. That's something that we have to watch.
The one point that I do think is interesting is, and I have often said, is why are we doing so much auditing of low income? And I think that's a very good point that you made. So if you look at, it seems that the earned income tax credit is a disproportionately audited credit. And so is there...
Because the non-compliance is high in the earned income credit area. All right. Again, why start with low income taxpayers? Why not just exempt them? Because those low income taxpayers over time are going to go into the upper brackets. Once you have someone is not complying, they tend to continue that way. And so you're talking about people that over time, if you don't get them started in the right direction, if you don't get them complying, then you risk having larger and larger numbers throughout your system that are not compliant.
Next, we have Chuck Rettig.
Also, under IPERA, Treasury has to report improper payments every year. You have to touch a taxpayer base to determine and come up with data that says how many people are we paying who should not be paid. And so the improper payment rate, the numbers in EITC is around $60 or so billion a year in refunds, but about 20 billion of that is designated as an improper payment based on the audit activity, which is actually under 1%. When we were there, we were running 8 to 11% on the over 10 million AGI folks. And so you're required for IPERA to come up with data that says, what is the improper payment rate?
John, I want to get your thoughts on sort of what we've said so far in terms of personnel. So we've talked now that we're losing a lot in audit. So how are we going to start right-sizing the size of the IRS?
Well, I think all of us would agree after our tenure that there are things that you could do to make the place run better, and nobody has enough time to get it all done. So it's not as if the present situation is perfect. I think the challenge is that to make those improvements, you have to know exactly what you're doing. It's a complex system. Larry's talk at some length appropriately about the complexity of the audit process. The technology is complex. Getting with taxpayers is difficult. And so if you're going to do it, you run a great risk of not doing it very well if you just say arbitrarily, we're going to take 30% of the people out of here, whoever they are, and not worry too much about whether they're managers, leaders, or entry-level employees. Well, I was there because of the budget cuts. We went from 100,000 employees to 80,000 because the only way to deal with the lack of funding was just to not replace people. So I am concerned, not that the final number isn't going to be right, although I don't think getting rid of 40% is the right number, but whatever the number is, I'm concerned about the way we're going forward. There are reports that 20,000 employees accepted the buyout, delayed till the filing season was over. And as I told people, those 20,000 people are going to include managers, senior executives, people who have been around a long time, and they're not fungible. You can't decide later, well, we cut too many IT people, we cut too many revenue agents, we'll just go hire some more. Some of those people had 20, 30 years of experience, were experts in how the IT ran, how the audit process ran. And to find replacements for them is not easy. And usually what you do is you bring very bright, good people in, and you take 2 or 3 years to train them as you go forward. So I think we're in the middle of a certain amount of chaos, but I am confident, as all of us are, that the remaining employers are going to do the best they can. But my concern is, for a lot of people, the only interaction they have with the federal government is when they file their taxes. And to the extent that because of the constraints and the loss of people, the IRS begins to function inefficiently or more inefficiently, and people start to complain about the IRS, they're really going to be complaining about the government. And that ignores the fact that there's an inconsistency and irony in saying, on the one hand, you're worried about the deficit, and on the other hand, you're happy to constrain the ability of your revenue collection arm to do its job. And that obviously doesn't make a lot of sense. And there's nothing I can see in what's being done that's going to actually influence and improve the efficiency of the IRS. I think our risk, if you lose 30 or 40,000 people, the risk is the efficiency is going to go down.
You need to find a balance between an oversupply of people initially with technology, and then you see how the technology sets in. You leverage the human resources you have. And the ones you have, you can reskill and move to another area. So if you take the cutbacks now, staffing cutbacks, and we run into another COVID or similar, you can't all of a sudden just get on the horse and be able to perform the mission in the middle of a crisis. So it's the federal government. It serves the people of the greatest country on earth, the wealthiest country on earth, and our people and our services provided by our government should not be strictly resource driven, but there's a balance. And I think where we are seeing a lot of concern, have people focused on what's the right balance between the human resources, if you will, inside IRS and other agencies with technology. Ultimately, yes, technology helps you leverage the people you have, but being prepared for a what-if scenario, we lived that what-if scenario, and I think we're all consistently saying the people factor of the people inside the agency allowed the IRS to do as well as it could.
Are we saying that we think it's difficult, if not impossible, to hire people to the IRS? That has not been my experience.
Larry, I try not to exaggerate. I think this is the biggest challenge to the country since the Civil War. Nobody has seen anything that looks like this. Nobody has seen people coming in and saying, I think what we'll do in a short period of time is get rid of 40% of the employees. And nobody has seen a government that means public service. I mean, when you have the head of OMB saying people should be traumatized, they should worry when they come to work, not exactly a selling point. Nonetheless, I do think that there's a residual core of a lot of people out there. My experience when the IRS was in the middle of being yelled at, and as Chuck said, with not any ability to hire much, we had a window of opportunity one year, and we could hire 500 people. And I wondered, because we had no connection anymore with universities, public policy schools. And I was amazed at the number of people who said, yeah, I'd like to come work for the IRS. And because it would be challenging, it would be public service. As I've always said, having spent 20 years of my career in the private sector, the great thing about the public sector is when you get up and go to work on a Monday morning, you don't have to ask whether it's worthwhile. You know, wherever you are, that what you're doing is affecting and helping people. And so it's a worthwhile cause. The private sector, if you make more widgets, that's important. But, nobody's really too excited about the widgets. But everybody's excited about the ability of government at all levels to provide services to the public, to protect the public, to provide it the information it needs. So I think we have a good selling point, but it's the first time we're selling against that kind of push from the government, demonstrating that, you're not valued if you work for the government. We'll be happy to send you a notice at 11 o'clock in the morning that you got to clean out your desk. I mean, the pictures at AID and all across the government of employees with bags and cartons or stuff they're taking out because they've been told to vacate the premises before the day is out is not helpful. So it is going to be an interesting challenge to see about hiring. But right now, the challenge isn't hiring. The challenge is trying to adjust to everybody who's leaving. And my concern is we talk about technology and what's the status technology department when the chief information officer and the deputy chief information officer have left. And I don't know how many people underneath them in IT have left. Those are all, again, the people who knew intimately how the systems, complicated systems work. And replacing them is going to be tough because no matter how good you think the ultimate system is going to be and easy to run, you got to get from here to there.
The technical areas where IRS is hugely deficient, you cannot rely on what today would be entry-level people or less than 5 years. And so just take what we know, right? Partnership tax, and multiply that times. I'm sure there's a similar thing in IT, similar thing in HR. It blends through the agency. Really complex.
Well, all I can say is my friends that basically went into the IRS to begin their careers think there's no better place to go. They don't think the law firm, but particularly guys, you don't realize what's going on in the law. The alternative for folks coming out of law school, they can choose the private sector. I may be wrong, but I think in the tax area, you're not going to have that much trouble filling entry-level jobs.
And the challenge will be who's training them, how many people you have to take, experienced people to train them. And when a lot of those people are gone and you're trying to run with a skeleton crew, I think you're right. I hope you're right that we'll get entry-level people excited about public servants. But there's going to be a gap. And the challenge is going to be what happens in this next filing season. And whatever happens, if it doesn't go well, the first response by people is going to be, well, it's the agency. It's all those government employees. And I can guarantee you that whatever the problems are this next filing season, it won't be because of the employees. It'll be better than it would have been because of the employees. I think our experience across the board is, and I spent 20 years in the private sector, I'd never worked with a better workforce. I'd never worked with people more dedicated. And as I've said, and I really mean it, and I continue to say it, the best thing about my 4 fun-filled years of 40 years was dealing with the workforce.
My big concern for next year is frankly taxpayer service. Filing season, yes, but particularly taxpayer service. The reason is because people worry about the complexity of the tax law. Change is every bit as bad as complexity. And you're going to change a lot of the tax law with this big, beautiful bill. And that means you're going to have to train the folks on the telephone. That means the demand levels are going to be huge when you get toward the filing season next year, if this act passes. To me, that's where the risk is from the standpoint of the IRS.
I think that's right. There's a huge amount of taxpayer service that either won't be done. I'm decidedly worried it'll be done by technology. And I don't think we're in any way ready for that. And we're going to have an expectation that AI can do things that it is not yet ready to do. And then what happens when taxpayers are given the wrong answer? What is going to be the taxpayer's comfort level with new technology, with AI? Could we see an AI chat bot? How much technology do you think taxpayers are going to be comfortable with and should be comfortable with?
Look, we've been on a journey at the IRS to better understand what taxpayers favor and can be okay with from an automated standpoint. Let me give you an example. At some point, we started pivoting taxpayers on the phones to, if they wanted to create an installment agreement for a balance due, to do it through, pressing buttons versus talking to a customer service rep. And then at the end, we survey them. How was your experience? Right? And we aim to hit, kind of a benchmark, a government-wide benchmark of customer satisfaction north of 70%. And if you can achieve that, then you start learning these are the parts of the tax services portfolio that will lend themselves to directing to technology, to a bot, to an automated solution versus other things that don't work so well. And then the technology catches up, right? Well, when we tested that 2 years ago with the version 1, we got low customer service points, but now they're up to version 3. Let's try it again. This is no different than what your bank does or your retailer does if you're going shopping in a department store online, whatever it is. They are rolling out solutions to test whether their customers will be okay with the more automated based solution versus needing an actual person. And as you know, based on living your life, a lot more today versus 5 years ago versus 10 years ago is done with AI and with automation, and there's been success. But that didn't happen overnight. And that didn't happen with testing. And this is what's important. It happened with customer centricity, right? You want to make sure that the customer is dictating the pace of how we're changing our interface with the customer, because we don't want to screw that up and lose customers to our competitors who maybe have thought more strategically and more nuanced about this. So I am very bullish that a fair amount of what taxpayers are doing today with humans or in a manual process can be shifted. The question is, what is the plan? What does that look like? And how are we going to put in guardrails to make sure that that if we're using AI, some of the guardrails should be, are we building trust with our customers? Are we doing adequate to superior levels of performance? But the other thing, and I'll pause after this, is with respect to AI, when I was commissioner, I got a lot of tough questions around, pushing from both sides of the aisle to be thoughtful about AI, because AI can, if it's not well articulated and well managed and regulated, could it surveil a taxpayer? Could it overreach on a taxpayer? Could it unleash a bigger version, a 1984 version of government, unless you're super transparent and super careful about what you're doing? And so I always approached AI cautiously because the stakeholders wanted me to be cautious about it. So I would invite those same stakeholders to be cautious again, because if the answer is AI is going to replace the IRS, then you have to, or the IRS workers, then you have to raise these questions again.
The one concern I've always had with AI and the IRS is if you've got an AI tool, you're going to have to input data into the tool so that it starts to learn and it can produce answers. What is that data set that we're going to be putting into an AI, a generative AI tool at the IRS? And I worry decidedly that there could be too much data that goes in. And then we're going to get into taxpayer information. And what of the taxpayer information goes into an AI tool that becomes that training set on which it learns? And so there are necessarily, I think, a lot of guardrails that need to go around how an agency like the IRS implements and uses some of these tools that are going forward.
This is why sometimes things take longer. It's not that if you come into the IRS and you say, currently 20 people have access to this data, we'd like 25 people to have access. The answer isn't no. The answer is, why do the additional 5 people need access? And then can we reset our control environment to make sure that when we add 5 more people, these 5 people know the rules? So as you expand or narrow either the number of people or the number of systems that this data exists in, you want to make sure that you're doing it thoughtfully so that you're not increasing security risk, cyber risk, unauthorized access, insider threat, all the things. This is risk management and IT security 101. It is really not rocket science, but it does tend to slow the process down. So if you walk into a government agency on day one, you just got your badge, it's fresh, it's still warm, it was just printed, and you're like, give me all the data. Or move the data to my friend who's working and it's his first day or her first day at this other agency. The answer isn't automatically over my dead body. You want to go through a series of questions. First of all, do we have the legal authority to do it? And then if we do, what is the need for that information? And if there is a need, what are the corresponding security controls that we're going to put in place to make sure that when we share the data, we're doing it in a way without increasing the risk that China gets their hands on the data or some bad actor out there who wants to do something bad with the data. It just takes time. And this can frustrate taxpayers and frustrate new government leaders who've never been in government before. But this is the medicine we take in order to balance these various needs of security versus speed.
I did want to talk a little bit more about confidential taxpayer information and its importance right now, particularly given the additional pings that are being done to get information out of the IRS.
I think there's a broader point here that might be worth pointing out is that people say, what do you make of what's going on at the IRS today? And my answer typically is, I don't know, because the winds haven't died down yet. In other words, it's almost like there's a hurricane working its way through, and it's still nighttime. And when dawn breaks and the winds have died down, we can figure things out. And so on all of this, we're challenged with having to wait for some equilibrium to be achieved so we can kind of assess where we are. And so a lot of confusion reigns right now, and I don't envy. To be honest with you, as much as I love being the commissioner, I'm not sure I envy the new IRS commissioner who's going to come in a high period of uncertainty and have to try to stable the ship. It's going to be very challenging.
I think Danny's right that we all have to wait to see what things look like when the dust settles and the sun shines. But I don't want to let this opportunity go by without expressing my broader concern. It's 7217 I've discovered. Specifically says the president and nobody in the White House can actually instruct or suggest that there be an audit. And yet we now have the White House suggesting that Harvard ought to lose its tax exemption. That's what they deserve, and looking at tax exemptions for others. And together with this move toward sharing data about undocumented immigrants, it does seem to me that it's important as a policy matter, but it's going to affect the ability and willingness of taxpayers to give their data to the IRS. And to have the IRS not be politicized. It's important for people to understand how significant it is for taxpayers to feel that unless there's some significant problem out there, their information is protected. And I just think the message needs to go out that at least from the standpoint of commissioners, we all understood that you would do whatever you could to protect taxpayer information. I got asked at a hearing why wasn't I willing to share information about undocumented immigrants who pay about $70 billion a year in taxes. And they do that because they actually, if they have a chance to become citizens, the first question they're asked is, have you paid your taxes? And I said, our job is to collect taxes and from whatever people owe. It's the job of other people to worry about immigration policy and the rest of it. And we're bound and determined to protect the information that taxpayers give us, unless, there's a court order, there's a specific investigation going on. But generally, it's not our role to collect data and then share it with anybody else.
Well, I think that goes to the very core of voluntary compliance. The taxpayers have to feel comfortable that if they follow the rules and they pay their tax accordingly, then they go forth, and that the information that they're giving, which quite honestly is a lot, will be protected. They won't be targeted. All of this just goes right to the core of the system that we have of voluntary compliance. So when the dust settles and the sun is shining again, what is the hope that the IRS will look like?
Look, I think there's a lot of data now on the strategic approaches for the IRS. And I think we should take what we learned from each of them. And, from the one that's going on right now, there's certainly some learnings that there may be a different way of doing business. There may be ways to move quicker, to break glass in a more substantial way than previous IRSs have. But from my vantage point, we need some controls on the glass breaking. So it's kind of like, I always have this vision of a scatter plot, and where do you draw the line in the scatter plot? I think you could probably see places where the IRS was too risk averse, too slow, and not aggressive enough in moving towards modernization. And right now we're seeing the opposite. And so I hope that when the dust settles, and maybe we're seeing some of that with some of the calibration that the Secretary leadership seems to be doing to pull back some of the more aggressive DOGE actions, that we're moving more towards the middle of the graph. And hopefully that stabilization will allow a sense that you can start, that with calmer waters, you can start building that future.
Thanks again to the former commissioners for this special discussion. And again for our listeners, If you'd like to hear more of what they talked about, you can find the full Taxing Issues webinar linked in our show notes. That's it for this week. You can follow me online at TaxStew, that's STEW, and be sure to follow at TaxNotes for all things tax. If you have any comments, questions, or suggestions for a future episode, you can email us at podcast@taxanalyst.org. And as always, if you like what we're doing here, please leave a rating or review wherever you download this podcast. We'll be back next week with another episode of Tax Notes Talk.
Tax Notes Talk is a production of Tax Notes. You can learn more about us by visiting www.taxnotes.com/podcast. When major media wants the straight story, they turn to Tax Notes. Thank you for listening, and join us again for another edition of Tax Notes Talk. Tax Analysts, Inc. does not provide tax advice or tax preparation services. Nothing in the podcast constitutes legal, accounting, or tax advice. A full disclaimer is included in the transcript.